Hi, my name is Alex Kurlich with GustanShow.com. I want to talk to you about FHA Manual Underwriting and what we really look for when we're doing that. If you have a relatively clean last 2 years, no mortgage lates, no car lates, no installment lates in the last 1 year, you can have up to 2 installments and mortgages combined. So you can have 1 mortgage, 1 car late in the last 24 months, but not in the last 12. And you can't have any more than a 90-day late on a credit card. If you fit that guideline, and we can probably do a manual underwrite for you. So the manual underwrite means that you can do a certain ratios, 31/43, 37/47, and 40/50. When I say 31/43, I mean 31% is your mortgage payment divided by your gross monthly, and 43 is your mortgage payment plus all your monthly debts divided by your gross monthly income. If you stay in the lower tier of 31/43, all we need is 1 month mortgage payment in the bank after you close. So your down payment can be gifted to you, your closing costs can be credited by the seller to you, so all you really have to do is have to have 1 mortgage payment in the bank, as long as you don't have more than those lates I discussed earlier. You can't have any charge-offs in the last 2 years either, because when you have a charge-off or you have a collection that's within the last 2 years, those are considered derogatory beyond the ability to do a manual underwrite. So you can have old charge-offs, old collections, but if they started in the last 2 years, it'll disqualify you. If you are trying to do 37/47 or 40/50, you need compensating factors. Compensating factors there's 4 of them, and if you do 37/47, you only have to have 1 of them. If you have 40/50 DTI, you have to have 2 of these. The compensating factors are as follows. You have to have 3 months mortgage payments in the bank after you close, and again, this has to be your money, it cannot be gifted. Everything else can be gifted, except the reserves has to be earned, own money. No cash, earned money. And that's 1 compensating. Number 2 is you have to pass the residual income test. Residual income test is a complicated formula. We have an ability to help you, guide you through that, and if you pass that, that would be another compensating factor. So if you had those 2 compensating factors, you'd be eligible for a manual underwrite based on the compensating factor rule. And the 3rd compensating factor is you have income that we are not using towards your income to qualify you because it doesn't fit the program or it doesn't fit the profile of qualifying income. So if you had overtime for the last 1 year at your job, and we can document it, we don't get to use that overtime because you need 2 years of working overtime to use overtime. So, but you received it the last 1 year and you're receiving it now, that's a compensating factor, and the underwriter can use that as the 3rd compensating factor. Then the 4th compensating factor is you have to verify your rent for the last 12 months, and if your new mortgage payment isn't more than 5% of your current mortgage payment, so if you're spending $1,000 right now on rent and your new mortgage payment's $1,050 or less, that's a compensating factor because you have no payment shock. So you prove that you can pay rent on time for the last 12 months at $1,000. They believe that you can pay a mortgage payment at $1,050. So that's the rules on manual underwrite and compensating factors. You give me a call, I'll answer all your questions about it at 630-915-7550, or go to GustanShow.com and see all our blogs.